All Trade Wealth. At this time, we are going to watch and learn about peep into the stock market. That means we may call that stock market basics foundations or market intermediaries and various types of assets classes. Here we are going to discuss that we're going to learn here the basics of stock market, all that we need to know about stock markets, the foundations, before we make our first move or our first transactions into the stock market, and why should we invest in the stock market for the first place. I call these why factors, or we may call these why invest in stock market. Why invest in stock market? What is the benefit of investing in stock market? To make you more understandable, I'm just going to give you a few examples. Let's assume that you earn 50,000 yuan. You earn rupees 50,000 per month. This is what you want. And expenses. You spend 30K, that means 30,000 per month. Just for an example to make you understand easily this one, I'm just taking out. You spend this 30,000 for various expenses, maybe basic needs whatsoever, and saving here. After spending 30,000 per month, out of 50,000, you still have 20K, 20,000 per month, which is called hard investable cash, or we may call this retained cash. Except salary hike, or cost of living expenses. Cost of living expenses. So now you are 30 years of age. Now you are 30 years of age and you are going to retire at the age of 50. You still have 20 years to invest. You still have 20 years to invest. Here you want 50K into 12 is 6 lakhs per annum, out of which you have saving, which is investable cash or your retained cash. 20K into 12. That means 2,40,000 per annum. So here, without investing in equity, mutual fund, or without investing in any stock market, if you just save your hardly earned cash, this 2,40,000 for the period of 20 years, how much you got? It becomes 1.79, let's say 1.8 crore. Without investing in any bank savings or any bank fixed deposit. So if you invest to like 40,000 for the period of 20 years, it becomes 1.8 crore. And you probably have some desire like buying a car, buying a car. You probably have buying a car or any luxury things, luxury lifestyle. So let's take a look instead of put that cash idle. Let's invest it in an asset that return 12% per annum. If you invested in an asset class which rate of return is 12% compounded annually, you're gonna earn at least 4.27 crore. So I hope that you can figure out that if you just save without invested in any savings or any fixed deposit or any like bond, etc. If you invest without investing in gold also. So if you invest in mutual fund or if you invest in equity, which the rate of return is 12% and compounded annually, then you can earn 4.27 crore. So you can figure out that why invest in stock market. I'm going to give you for more detail that with illustration later on. Now the question is here, where to invest those retained cash. You got money and you've earned money and saved money, but you don't know where to invest those your hard-earned money. So here I'm going to show you different assets classes. The question here is where to invest and where are the asset classes out there. So we're going to discuss here different asset classes. Different asset class have different risks and return. Investing in a types of mutual fund, equity, stock market is in a risk nature. We won't find any classes that is free from risks. If the risk is high, return return is high. Similarly, if risk is low, the risk level is low, return also low. So here the first asset class is fixed income. I'm not going to details, I'm going to summarize only. Fixed income. If you put your money in bank like savings account or fixed deposit account which come in recurring deposit, multi-option deposit or PPF, public provident fund, and Sovereign gold bond scheme, SG. Sovereign gold bond scheme. Your capital is safe here, and you're gonna earn your capital plus interest in fixed income. So, in short, in fixed income, you have a principal, you have a principal amount where you invested and you receive an interest. You receive an interest on a yearly basis or maybe yearly basis or quarterly, maybe monthly basis. And under this scheme, there is 5 to 10 years government bond. I'll put in short, government bond, which is a government bond, which is a fixed income asset, and which give out. This is a fixed income asset, and which give about 5% return. 5% return a year. And another bonds is here. Bonds issued by the government. And another one, bonds issued by government owned enterprise. Or bonds issued by corporate. By corporate. Okay. You got saving and you got investable cash or retained cash, but you are in a doubt where to invest your hard-earned money. So the first one is that fixed income instrument, maybe fixed deposit in a banks like recurring deposit, multi-option deposit, which interest rate is about 5 to 6% compounded, and bonds issued by the government, which is fixed income assets and about 5% return a year, and bonds issued by the government, bonds issued by the government, and bonds issued by government-owned enterprise, and bond issued by corporate. Another one is equity. In case of equity, there is no guarantee if you invest in shares of a company. There's no guarantee that you'll get back that your interest or your principal amount. But if the price of the shares increase over time, if the price of shares increase over a period of time, you can buy any shares listed on the NSE, which is called National Stock Exchange, and BSE, which is called Bombay Stock Exchange. And Nifty. Nifty have generally gives a 14% return. 14% return. Some of the best companies in India gives around some of the best companies like Reliance, NTPC, HDFC Bank gives return about 20%. So in case of fixed income, it got return about, this is fixed asset class, and you got interest on your capital, and the return is around 5 to 6%. And in case of equity, it got 14%, and some of the best companies still offer that 20% return. But there's no guarantee that you would get that 14%, 20% in return. There's no fixed guarantee. It involves lot of risks. Okay, it involves lot of risks. As I already mentioned that if the risk is high, return is probably high, and if the risk level is low, your return would probably low. So you may consider, or you can now compare that which asset class is a better option for you, which one is good, which one has offer more return. In case of fixed assets, there is guarantee that you will get back your principal plus interest, but the interest rate is not that much high, around 5 to 6, though it's compounded. So in case of equity, there's no guarantee that you get back that your principal plus that capital gain. But if you are willing to take risks, there are lots of opportunities and you can earn around 14 to 20% in return, which is compounded annually basis. Now we are going to discuss another asset class. We have real estate, real estate investment. May consider you commercial and residential. Two ways to earn from real estate. There are two ways to earn from real estate. The first one is rental income. Where you can you rent out to the tenants. And the second one is capital appreciation. Capital appreciation. The first one is rental income and the second one is capital appreciation. Capital appreciation is that the asset itself grows. So here the asset itself grows. I'll give you an example so that you may understand it. Suppose you bought an apartment. You bought an apartment. You bought you bought an apartment for, let's say, rupees 1 crore. Then you hold or retain and sold after some few years, okay? After 5 years or after 2 years, maybe after 1 year or maybe after a month, after a week or whatever, maybe the time period, it doesn't make sense that. So you bought for rupees 1 crore, then you sold it 1.5 crore. You won here 1.5 crore minus 1 crore. So here the asset itself grows. That means you bought an apartment in a cheaper price and you sold it for a higher price. That is the return. That is the return from an investment through real estate. Another asset is gold. The returns is, in case of gold investment, the returns is around 9%. You can invest in physical gold or you can invest in digital platform, or you can invest through that sovereign gold bond scheme in many banks. Or buying gold bars or invested in ETFs. ETF means exchange traded funds. Exchange traded funds. So we've already discussed the different asset classes where you can invest your hard-earned money, your retained cash. The first one is fixed assets like savings, fixed deposit, recurring deposit, multi-option deposit, or bonds issued by the government, or bonds issued by government-owned enterprises, or bonds issued by corporates. And the second one is equity, which gives you around 14% to 20% return. But there's no guarantee that you will get such return. There are lots risks involved. And the third one is real estate, buying land, residential, commercial, and the first one is rental income, through rental income and through capital appreciation, where the asset itself grows and where you can buy an apartment or asset in a more cheaper price. At the same time, you can sell it for a higher price. That is the investment gain. Then gold, which gives about 9% return, and you can invest in physical gold or digital platform through many apps like Paytm Money and through banks. You can invest in sovereign gold bond scheme and through exchange traded funds. Let's advance. So after having gone through, I'm gonna put some illustration to make you more clear about what we have gone through that. Let's put here. This set is the duration period 5 10, 15, okay, 20. Suppose if you invest in fixed income 20k, 20,000, for a period of 20 years, your total earned is about 2.4, let's say 2.4 crore. Okay. This is fixed income. And if you invest in gold, which gives around 9% return, and here fixed income or 5 to 6% return. Okay. The period, investment period is same for all, that is 20 years. And amount is same for all, that is 20k investment amount. So by investing gold, which give return around 9%, and for the period of 20 years gives 3.3 crore. This is gold. And if you invest in equity stock market for the same amount, same period of year, how much you gonna earn? 5.7 crore. Here you invested the same amount. You invested the same amount, same period, but where you invested, the asset class is different. The money, the cash is same and the period is same, but where you invested, your investable cash is different. In equity gives you 5.7 crore. In gold investment gives you 3.3 crore. In fixed income gives you 2 point something 2.4 crore. So from this only itself, we can choose which which asset class, which investment pattern is the best. But as I already mentioned that equity equal to risk. Gold investment equal to less risk. And fixed income invest in equal to no risk. If you invest in equity, the chance of earning absolutely high is possible, but it involves risks. In gold, the chance of earning quite high, not that much high, is possible, but a small risk is there. In case of fixed income, your earning chances is not that high, but there's no risk. Freedom from risks. So according to your appetite for risks, you can choose them. I hope everything is clear about this. Let's advance here. So we have gone through that. Sorry, many things about why invest in stocks we've gone through and which class we got to choose, like asset class, different asset class now, and information about illustration also I gave you. Now market intermediaries. Broker, broker or stockbroker is a corporate entity. He or she may be corporate entity. Register with stock exchange as a trading member, and this is where we place, sell, and buy order. You have to register with stockbroker for buy and sell share. For opening trading account, demat account, so for buying and selling transaction, opening trading account, for opening trading account, demat account, and they are corporate entity and they register with a stock exchange. So broker is corporate entity registered with stock exchange. So for buying and selling and opening a trading account and debit account, you have to link with broker. Exchange or stock exchange. Here, buy and sell order are placed and matched in the exchange. As the name stock exchange, trade took place here after the trade executed. In stock exchange, buying and selling order placed. Buying and selling order are placed here. Buying and selling order are placed. After placing, they match all the necessities. And the trade took place. And the trade took place. And after that, the trade executed. So in the first place, broker is an agent registered with stock exchange where we register for buying and selling shares and opening trading account and debit account. And if here in the exchange that the buy and sell order are mature and the trade transaction took place and executed in case of the exchange. After stock exchange clearing corporation, in case of clearing corporation, we have two clearing corporation. The first one is NSCCL and the second one is ICCL. They are two clearing corporation. And NSCCL is owned by National Stock Exchange and ICCL is owned by Bombay Stock Exchange. Just for your knowledge, I just did. Their main duty is that whether the transaction took place or not, it ensures the transaction took place accordingly and let me write in a short way. Account which needs to pay. Account which needs to pay is account which needs to pay that is debited, and the shares credited. The shares credited to which is purchased. So in case of the incorporation, we have through their incorporation NSCCL, which is owned by National Stock Exchange, and another one is ICCL, which is owned by Bombay Stock Exchange, and they ensures that the transaction took place and account which needs to pay that is debited, and the shares get credited to which is purchased the shares. Another one is depository. Depository is we may call depository digital locker safety concern. Digital locker. It is also known as digital locker. We have two depository, and the first one is CDSL. That is central depository owned by Bombay Stock Exchange. And the second one is NSDL. NSDL owned by National Stock Exchange. Here, under the depository, the shares get credited and reflected in the broking account. Here, the shares, those shares which needs to get credited is credited here. The shares is credited here and reflected in the broking account. I'm just giving you a summary only, just for the sake of knowledge. If you need the complete details, then you can watch out on Wikipedia. Bank. Bank is, as we all know, that bank is a financial institution. To open a trading account, you need a bank account which you need to link. To open a mutual fund, also you need a bank account to link with that. For funds, let me say in a simple way, for funds moving in and out, paying in and out. For funds paying in and out, and receive receive dividends, which needs to credited in your bank account, and other things from the stock market into the bank account. Your stock market maybe capital gain or your dividend receipt form, buying of shares, anything which needs to be credited and debited, you need a bank account here. It's really simple. I guess that we all have bank account, at least savings account. Though you don't have a current account, or at least savings account is mandatory. This is the last one. SEBI regulator. The full form of SEBI is Securities Exchange Board of India is a financial regulator. Financial regulator. Financial regulator. Financial regulator of the entire market. Market functions. SEBI is very important, and it safeguard and it safeguard and prevent control the interests of investors from being fraud or fraudulent involvement. So Security Exchange Board of India is financial regulator of the entire market, and they prevent, control, and safeguard the interests of the investors and traders from fraudulent activities. After having discussed about this, I hope that we are very clear about this broker with whom you open trading account, demat account, and buying and selling shares in the stock exchange here. In case of the stock exchange, buy and sell order placed and match and executed, and clearing corporation. In case of the clearing corporation, there are two clearing corporation, NSCCL and ICCL, and owned by NSE and BSC, and it ensures that the transaction took place in account which needs to debited and credited is ensured here, and depository acts like a digital locker, and we have two depositories, CDSL owned by BSC and NSDL owned by NSE. This is where the shares get credited and reflected in the broking account. Bank is a financial institution we need for funds moving in and out, for credited and debited. We need the bank involvement, and we need primary bank for auto debit, for investment, or for credited into our account. And SEBI, Securities Exchange Board of India, is a financial regulator in overall the market functions, entire market, and its control and safeguard and prevent from fraudulent activities uh, for the sake of investors. That's all for this time. Thank you so much for watching my channel and stay active. Thank you, guys. Bye bye. Thank you so much.